Now we're going to talk markets. Anybody want to talk markets? Or do you want to just skip this section? I don't have a lot of good news, folks, unfortunately, but I'll try to provide what I think your risk is moving forward. So we're going to talk about markets and basis. Ask me a question. Feel free to ask me a question along the way. Hopefully you'll get some insight from me. The managed money crowd. They're at record short position. This screen doesn't allow me to point, but you can see that red dot. For this time of the year, they're record short. A lot of guys will say, Mo, don't they have to cover that short position? You know, they're so oversold. Yeah, they could, but give me a reason why. Give me one reason why they should cover that short position. I can't find one. Now, things can change, obviously, and you guys are hopeful. You're always optimistic that maybe something will change, but I just don't see it. If you look at, Dan was talking about some of the weather from last year and the smoke and all that fun stuff, and he failed to mention that we had timely rains in July last year. So you had that smoke plus the timely rains, and you had better than expected yields. This is a map going back 132 years, timely rains in July. You get closer to 1, and that's one of the wettest in 132 years. The U.S. Midwest was wet, and rain makes grain. The temperatures were cool during pollination. Everybody talks about those extreme temperatures, 100, 105, extreme nighttime temperatures. You didn't have them. And everybody says, well, what about all that flooding in the north central? What about the hail in Nebraska? What about the derechos? Doesn't that matter, Mo? No. It's 15% of the crop. You're focusing on the wrong end of the stick. You need to focus on the 85% that's really strong. And that's why you have record crops. This is for the month of August. It's been pretty cool, pretty wet. Maybe a little on the dry side, but you've got the soil moisture profile, right? I think Mother Nature said, look, you can be dry and hot in the west, in the south, in the east, but leave the corn belt alone. And that's exactly what happened. And that's why you have record crops. This is Western Canada. In the month of August, it's been a little dry. Stats Canada just came out with a report. Soil moisture profile is a little dry. It's a little bit worse in the United States. This was Alberta. I was hearing all sorts of horror stories. Mo, the yields are down 20, 30%. This is about 50% harvested. I didn't see it. And then Stats Canada comes out with some numbers, and the volume's there, folks. So the volume, maybe it's not as big as everybody thought. And maybe the Stats Canada report in December is a little bit smaller because of that heat during August. Did do some damage to yield finally. But there's big crops. It doesn't fix the glut of global supplies. This is Pro Farmer. 181.1. USDA was at 183.2 or something like that in August. Look at that bean yield, 54.9. That's a record bean yield. It's above the USDA at 53.2 in August. So your biggest risk is September crop report on September 12th. The USDA could print a 55. They could print a 185 or a 186. How many bulls are left in the room? You guys any bulls? Do you think prices are still going higher? No bulls? The bull's dead. He may not come back for a few years. I'll explain to you what that risk is if we get that 55 and we get a 185 on corn. This is the US dollar. As that 10-year US Treasury yield comes down, as they anticipate lower interest rates starting in September, on September 19th, whether you get a quarter point and half a point, puts pressure on that US dollar. We've been talking about this for some time. And you're approaching par or 100 again. If you look at that long-term trend going back to Trump, and I'm not advocating that Trump's going to be president next year, but if he does get in again, he's a wild card. And between 2014 and 19, the US dollar went to 90 cents. So here's your risk. If you get a 90-cent US dollar, what's the Canadian dollar going to do? It's going to be the opposite. Here's your Canadian dollar. We got a change in trend on August 19th for higher prices. And we're already up from the low of 72 to about 74 and change. Bean basis has lost 65 cents for new crop. Corn off about 15, 20 cents. Wheat from the highs off about 65 cents. If you do go to 80, 82, you will see a zero in basis for corn, zero in wheat, and your bean basis will get cut in half. So manage your risk, folks. Here's your basis on corn. The blue one is old crop, sort of the orange is new crop. You've seen some basis strength on old crop. Soybean basis, you can see that new crop coming off. And then there's the wheat basis also coming down. Diesel fuel, crude. Everybody's asking me about fertilizer inputs, which they do, Moe. Take a wait-and-see attitude. You've got a hard ag recession coming. It started with the used equipment market. An X9 you could have bought for $1 million last year, now worth $600,000. It's going to spill over to used equipment, eventually land rent. I think ag land's going to stay steady, Eddie, because there's a lot of demand out there. But crude, long-term, $65 is your buying opportunity. We've been booking diesel $1 or lower for 6 straight years now. So that's your magic number, okay? And if you use the Chalmers Fuels, one of our silver sponsors, 2-year forward booking program with Shell where they charge 3-5 cents, please take advantage of it. So OPEC said that they were going to cut production or increase production, in October. We're getting through the summer driving season. Eventually that should pull prices lower. And that 65 on crude is your long-term channel support. Fertilizer, steady Eddie. The global balance sheet's tight because Russia, China, India, US are playing games. And so the price is not necessarily falling like you guys would like it to as we get towards 25, but be patient. It takes time. You got storage, that 28% nitrogen is in that 350, 370, but it's hard to come by. We're having a tough time sourcing urea to make that 28%. But I would wait till the very last minute before I be booking fertilizer, just because you gotta lower your cost of production, okay? Natural gas is at the lows. I don't know if it'll go much lower than that. You're gonna probably see a spike if you get a bad winter in the coming months, but natural gas is cheap if you're looking to book for drying corn, that sort of thing. So here's your corn balance sheet. So the first or the second column is currently the USDA August crop report at 183 with ending stocks at 2073. You're lucky that that number, that 2073, is not higher. That's what's keeping corn from falling further. But look what happens when I get to 185 with no change in demand. Well, actually, I increased demand a little bit, just because the USDA is famous for finding demand when you increase that yield, that supply. You get to 22, 24, 26. You think it's a 190 US corn crop? I don't think it is. That's extreme. But guys, this weather is looking good for the finish. It's adding kernel weight, pod weight, and seed sizes are growing. So, but that is your risk. Nobody's expecting it. Nobody's even expecting a 185, to be honest with you. A lot of folks are in that 183, 182. Okay? The bigger that ending stocks number becomes, the lower the price of corn drops. The good news with corn is you got some decent corn export demand, unlike in the soybeans. Okay? I'm more bearish to beans than I am the corn. So the second column is your current ending stocks number. So let me tell you why. Who's going to store beans into 24? You're making a big mistake. And here's why. Okay? You can store, if you don't want to sell both of your crops, maybe something will change, you know? At least sell one of them. And I would sell the beans. So when the USDA in August report said, hey, ending stocks on beans, 560, up from 435, new record, soybean yield 53.2. That was your first warning, red flag. Your second red flag was pro farmer at 54.9. So now the USDA may print to 55 come September 12th. And if you get to 55, ending stocks balloon to over 700 million. What do you think price is going to do? That's your risk. So today, beans are up 15, and we're trading at 9.90. So we traded to a low of 9.55. That $10 is your new ceiling. It was your old support. If you get anywhere near $10, I'd be gone. Because come September 12th, the market is found a new bottom, this new trading range. But come September 12th, the market and the funds are waiting to see what the USDA prints. If they print to 55 and you get 700 plus, you're gonna see new lows. Once you break 961, you're almost guaranteed to go to 788. That's your risk. Okay, so I talk about how we were buying puts, and I don't know how many guys have a commodity account, whether you want to buy puts and calls and all that fun stuff, but I'd rather have you spend 30 cents buying a put and Moe lying like the beans and hope that I'm wrong, and beans go back into the teens and you lose 30 cents, but I don't want you to sit here, bury your head in the sand, and watch this thing go down another $2-3. That's your risk, and I'll explain why here in a second. So I talked about your red flag, your first one, your second one with Pro Farmer, your third one, Trump. If he gets into office next year, go back to 2014-19. He's going to start a trade war with China, Europe, Canada, Mexico. He's a wild card. China could buy some beans now, and they are, and we saw some export demand today improve. We're into that 1.5, 1.6 million metric tons, both for corn and beans. I've said you need to see a 2 in front of both of those because the supply is so large. But why would China buy beans from the US when Trump starts a trade war and then they have to cancel them in January? Because that's what's going to happen. If it's Harris, it's just the same old nonsense Biden policies. Nothing's really going to change. And then you have this big South American crop. Everybody says, well, Moe, it's dry. They're going to have a drought. That's the only thing that's going to save your butt is a drought, a major drought, severe drought, a 30% haircut drought. Whether it's South America, the US, or Russia, you need that haircut in Russia to help wheat. If you don't, and by the way, those droughts are rare. So because you're running a business, you need the cash, you got bills to pay. Why would you take that risk? I'm not taking that risk.
Does Russia have a drought?
No. Well, they had a drought. They had a slight drought. Production was down 10%, and at the peak, remember in May, everybody thought, oh, they're going to have a 30% haircut. Yeah, it didn't happen. And wheat just came crashing down. So now you're waiting for another drought next year, because you don't kill crops during this time of the year. Okay? 169 million metric tons soybean crop from Brazil. So the risk is not a drought, but whether they produce another record crop. That's just going to add to your global ending stocks and drive the price of beans lower. And then earlier I talked about that Canadian dollar. So you got a 788 plus a 150 basis, 950 versus, maybe 1245, 1250 today. So what do you want to do? Storing it's only going to cost you money. There's no carry in the market. Make a decision, but I would not be storing soybeans. Sorry. So this is corn. We haven't seen a low below 388.5. You get a weekly close below. You need to know these technical numbers. They're just long-term channel supports, but you get below 388.5 on a weekly basis this Friday, tomorrow. That's another technical sell signal. It's a bear market, continuation of the bear market. You'll see 350, 340, 320, 293 and a quarter by the winter low. If you look at that chart, that was Trump. Look how low corn got. It was just struggled. The margins sucked. Exports sucked because he started that trade war with China. You're going back into that period. And that could last for another 2 to 4 years. This is corn over a long period of time. Since 2006 when ethanol started, Look at where corn trades. Trades most of the time, 50+% of the time, between 350 and 4. When you're above 6, why you're not selling is beyond me. Same thing in beans. Here's the Trump era with the beans. Beans get worse because I can argue with you and say, well, maybe the USDA finds some crush demand. So we're going to increase that crush demand figure and offset the higher ending stocks. But we're already record strong, so maybe they adjust 20, 30 million, which is not enough. And could they adjust exports? They're overestimating exports. So unless exports catch up, and this is the time of the year where they can, and they're going to have to catch up in a big way, that 768 may be too low. You start adjusting exports lower, now that ending stocks number gets even bigger, and you can see $8 beans. Okay? Meal futures are lower. I think if you're a livestock producer, the good news is you got cheap meal, cheap corn, cheaper feed. Soy oil's been coming down as well, despite all the talk about biodiesel and all that fun stuff. It's a long ways away. And so the lower soy oil and meal is weighing on both beans and canola. This is canola here. You can see the big spike in 21 with that drought. And it's been coming down ever since. So I wouldn't be surprised if at some point canola goes to 400, 450 on the low end. Chicago wheat. When you have record crops in North America and you have ending stocks at 800+ million bushels, wheat goes to $4. So unless you can tell me that Russia's going to have a major production issue next year, wheat's going nowhere. If corn's going to $2.90, $3, wheat's going with it. There's your South America. It's really dry right now, but it's too early. Could they start planting today, September 1, if it was wet? Yes. And that would be an early planting season. The weather's supposed to be a little bit better as you get to the end of September, maybe early October. So it's too early to be worried about South America. But they are having issues with some dry weather. But again, your risk there is not the dry weather, it's the 169 million metric ton, huge record crop coming. This is the forecast going out to, 46 days. It looks a little hot and dry for harvest, but we'll see. We were getting a little dry and all of a sudden rain came in. So the rain continues to show up when you don't really want it. In 2025, it's our 10th anniversary. I want to thank you guys for coming here today. I appreciate it. Without you, the farmer, we could not do this. I want to thank all the scouts, the host, the sponsors to the tour who are attending today. Really appreciate it.